Hello everybody, welcome back for another video. Hope you're all doing well and that you're all having a great day. We have a lot to cover, so let's jump right into it. During the San Francisco Blockchain Week BCH DevCon, a series of global hackathons made its debut to the public. Recently, George Hotz, the founder and head of research at Comma.ai, shared his thoughts on Ethereum, dApps, and the Lightning Network. George stated that he recently studied Ethereum's geth in full, and according to him, Ethereum was a great platform for bug bounties. He said, if you find the exploit and you run it, then you get money in exchange, and that's pretty cool. I feel like all of that was a major typo. He further added that the contract itself was a bounty, and individuals would not need a developer. If they are capable of hacking the contract, they get paid. In addition, the process is not illegal because a hacker would just be running code on the Ethereum platform. Why not? George was asked about the ongoing developments and ICO projects where Ethereum was not able to handle the increased load, and if Ethereum could overcome such problems of scalability in order to achieve global mass adoption. According to George, problems of scalability on the Ethereum platform was a myth, and Bitcoin was the only cryptocurrency which had scaling issues. He further added that Ethereum could have problems in scalability if they were used to run CryptoKitties. However, he stated that the truth is nobody uses dApps for anything. There was news a couple of weeks ago for those who did not get to see that video. Somebody did a study and they found out, I think there are hundreds of dApps floating around out there right now, but I think on a daily basis, like only 12 of them are actually being used, 8 of them on EOS and 4 of them on Ethereum, and even then the ones that are actually being used have a usual daily user base of like less than 100 people, and there was even one of them that had I think 15 people who were actually using the dApp on a daily basis. It's kind of sad. I guess everything takes a bit of time. This is why I made a video before asking people does anyone actually use dApps or stuff like that, because I feel like some of them could definitely be useful, but a lot of them right now, little side note on the entire dApp situation. There was a dApp that I was thinking of using. I can't remember the name of it. It was some type of monster fighting collectible amazing awesome game, and in order to actually get a monster, I think it cost it was $80 in Ethereum or something like that. And then if you wanted to get a mega monster, it was 2 Ethereum. And I was like, why would anybody pay these prices? I think a lot of the focus right now on a lot of dApps or apps, whatever you want to call them, is focusing specifically on them trying to make as much money as possible. The games that end up becoming the most popular, especially on the iOS store or the Google Play Store, are the ones that are typically free. If you ever looked at the actual top earning games and stuff like that, it typically tends to be those because anyway, that's beyond the point. But a lot of the dApps right now are cash grabs. At least this is kind of the way that I feel of it. You shouldn't have to pay $80 in Ethereum just to get a monster that you can't even really hold, and that game might be gone in 2.5 weeks. So what's the point of having paid 80 for? Anyway, continuing on, George also spoke about Bitcoin and its scaling issues. He also commented on the Lightning Network and if it was an appropriate solution for Bitcoin's issues. George stated, I don't know, at one point in my life I paid $17 for a Bitcoin transaction, and that does kind of stick with you. I don't know, Lightning looks complicated and it doesn't work, or I would agree maybe it works. End quote. This guy's quotes are all over the place. As far as an appropriate solution, for those who don't understand exactly what that means, people have been coming forward and saying that they do not agree with the Liquid network, which just launched a couple of days ago on the Bitcoin sidechain network, because they said that it is not the scalable solution for Bitcoin that they were looking for, even though they do agree that it will help to scale Bitcoin. The same exact thing has been floating around for the Lightning Network. I spoke about it many times before towards the beginning of this year, between February, March, April, somewhere around that time. People told me I was spreading FUD, and now a lot of other people, developers, thank goodness, are starting to come forward and talk about it as well. What it comes down to put it short as possible, is that the people behind who made the Lightning Network are actually capable of selling Lightning Network nodes, and they're selling them to banks. And therefore, what's the point of a decentralized Bitcoin or decentralized sidechain network that's going to make Bitcoin faster if banks are the only people or the mega companies that are going to be buying it? Because in order to use the Lightning Network, you have to pre-fund your Lightning Network node with Bitcoin. And the only people who have about 3,000, 4,000, 5,000 Bitcoin to pre-fund their nodes are really rich people, and this is why a lot of banks are buying their nodes. Therefore, this is why it says it's an appropriate solution. As far as his quote, that doesn't really make sense. I wonder if they were talking to him at a bad time. George Francis Hotz is an American hacker famous for unlocking the iPhone and allowing the phone to be used with other wireless carriers, which is contrary to AT&T's and Apple's intentions. He also developed the Lime Rain jailbreak tool and boot ROM exploit for iOS. As of September 2015, George is working on his vehicle automation machine learning company called Comma.ai. That's wonderful. I mean, I don't know. I'm just gonna kind of move on. Those quotes kind of threw me for a loop. I mean, these things will eventually scale at a certain point, but you'll see a bit later on, especially as I'm reading, it feels like everyone is just trying to attack everyone. There's been a lot of speculation, I'm sure you've noticed, as to when the market is going to go up next. And we had stuff like a couple of weeks ago where people were talking about, oh, I think your platform is slow, or it's not doing this, or you're not capable of doing this. But people are starting to become very nasty with the things that they're saying. And I think it's once again coming down to the money or potential money that there is to be made in the cryptocurrency space. Anyway, let's move on from this. Here we go. Coinbase is in the news once again. If anything, Coinbase is a conservative exchange and has been for years now. We can judge this from the number of coins that have the exchange's support. All of them are mineable, and with the exception of Bitcoin Cash, a fork from Bitcoin, these networks have been around for years. Furthermore, even though ideal decentralization is not possible, at least the US SEC considers Bitcoin a utility because of the level of node distribution and the lack of a third party that wields enough power to influence price. Therefore, the sudden addition of the 0x token is a move away from the prudence Coinbase is known for. Though nothing can be taken away from the 0x protocol and what they intend to solve, the community is critical of shifty Coinbase rules, which tend to change every time it supports a new coin. First, before we even start out, Coinbase has a thing on their website where they talk about the criteria that your coin needs to have in order to be able to be listed on their platform. The first time, I think they've changed it 3 times, if I'm not mistaken. It's more than twice. I'm going to say 3 times. Every time that they change it, people figure out that there's something new that they've added to it, and it leads to the assumption, you'll get it as I'm, reading through more of it. Coinbase doesn't really, people have been saying, I'll put it this way, people have been saying for quite a long time that Coinbase is, they make sure that what they list is good and great and awesome and is something that the community is asking for. They make sure that it's hyper decentralized. They make sure that there are no, they've been accused of insider trading before when it came to Bitcoin Cash. So they say that they try to make sure that everything that they're listing is demanded by the community, that people desperately want it, that it's this, that it's that. And every single time that they add a new coin, their criteria also changes. Like they keep adding stuff or taking away stuff. And then everyone's kind of confused as to what they're actually going to launch, because you can't write something and then say a week later, oh no, we're going to change it. And every time you add a new coin, you end up changing the rules once again. Nobody knows exactly what the rules are then if you can just change it every single time that you add a new coin. Here are the 0x charts, not that important. While we cannot pinpoint and know the exact reason why they chose 0x months after announcing they were exploring 5 different coins, including Zcash and 0x, it came as a surprise for Coinbase to add 0x, a pre-mineable coin that the community is unsure if it will get a node from the SEC, that's supposed to be a nod, from the SEC as a utility. This addition went against the grain, dashing transparency claims. They said, this was the original announcement, they said, we're thinking of adding Cardano, BAT, Stellar Lumens, Zcash, or 0x. Many people around the world assumed that they were probably going to add other coins beforehand, just because there were critics. That's where critics are crying foul, saying that there must be some form of collusion that needs investigation. After all, the company has been accused of insider trading in the lead up to Bitcoin Cash listing, but their own internal investigation cleared the exchange of any wrongdoing because there was no evidence. Now, as the company expands without following the openness and transparency like they did before Ethereum Classic support, speculations have begun to arise if the listing of 0x was inevitable. For those who weren't here for the Bitcoin Cash listing, what ended up happening was when Bitcoin originally forked, the developers, as this was like our first major fork in the entire cryptocurrency space, this was like the headliner one that was even on Forbes and Bloomberg. If you had Bitcoin, let's say you had 100 Bitcoin and Bitcoin Cash came to life, you then had 100 Bitcoin Cash, and every other platform had decided that they were going to allow other people to have their forked coins. Coinbase came forward and said, no, you can't have any of the forked coins. You bought this. You put this on our platform. Why should you have the fork? People came forward and said that they were going to sue Coinbase. Coinbase 3 days later came forward and said, we are proud to announce that we are going to give Bitcoin Cash to everyone who had Bitcoin on the platform. And then they didn't give it a specific date as to when they were going to add it. But like, I think 18 hours before the actual listing, Coinbase's charts showed that Bitcoin Cash, I think it had almost like doubled in price or something like that. And then when they finally did add it, they didn't have enough liquidity on their platform to be able to actually add the Bitcoin Cash. And I think Bitcoin Cash hit like several $1,000, like it was some astronomical number. Like I don't have the chart here, obviously I'm trying to find it, but like the line was like this. It was a complete shot straight up. And then I think they took it off the platform, said that they would wait a couple of days. And then, so the idea is that someone definitely knew inside of Coinbase, because a couple hours before they were announced that they were going to add it, the price on their platform shot up. And the only, who's trading on Coinbase that frequently, that the level of speculation would allow them to think, oh my gosh, Coinbase spoke about this 6 weeks ago. Let me definitely buy every single bit of Bitcoin Cash on their platform right now before they add it. Oh, they added it 18 hours later. Wow, that's wonderful. And their own internal investigation, they came forward a couple days later talking about, oh no, there was no evidence. We spoke to all of our employees, and therefore nothing went wrong, and the world just kind of moved on from that. Look at this photo, and you'll get it. First, 3 out of 5 advisors of the 0x protocol project have affiliation with Coinbase. Fred Ersham, for example, is the co-founder of Coinbase and the lead advisor of 0x. Others with ties to the project include Olaf Carson Wee and Linda Z. As it is, this is a pure conflict of interest, and how 0x got an arbitrary pick ahead of Stellar or Cardano doesn't make sense. That is probably the most important sentence of the entire day. When we had speculation that they were going to add other coins, everyone was like, well, clearly, they're probably going to add. Maybe when we had news that Gemini was adding Zcash, it's like, okay, well, Zcash is a shoe-in for Coinbase, and definitely Stellar Lumens and definitely Cardano, as they are larger coins and are more popular. I understand that 0x is a coin. People know about it. People knew about it. People use it. Got it. Good. The fact remains, like I said before a couple of weeks ago, and people were disputing me, talking about, no, I was completely wrong. On any given day in the cryptocurrency community, these 4 coins are known more than 0x. Everyone more or less knows Cardano and Stellar. Maybe not so much BAT. Zcash, some people kind of get it, but 0x was completely left field. And then we have news that 3 of the 5 people who are some of the heads of Coinbase are directly affiliated with the 0x platform. Both have a higher market cap than 0x. It is the Cardano and Stellar. In fact, there are similarities between this sudden 0x listing and that of Litecoin. Then, Charlie Lee used to work as an engineer at Coinbase, and it was highlighted by Tushar Jain in a lengthy opinion article laying out his reasons why he thought Litecoin would crash to zero. Not going to even read through that. Though the trustless nature of 0x's protocol and its decentralized exchange is something that Coinbase might use as it plans to support more ERC20 tokens, the way Coinbase handled this listing is suspicious. They also, the other side of it as well is that not only are they people behind 0x in some sort of way, but they also purchased a decentralized exchange that utilizes the 0x protocol, which means, to me, my opinion, the way that I see it, 0x was already going to happen. This is why, be frankly honest, off the top of your head, I'm sure you can think of at least like 8 other coins, and not even XRP. Push XRP to the side. XRP is in the corner, is grounded. You could think of at least 8 other coins before 0x that could have been added to Coinbase before anything else. Let's see exactly what ends up happening. They're receiving backlash as well as they. Coinbase is. People don't get that this is all about money. A lot of people were posting before that the reason they didn't add XRP and this coin and so and so and so because they were crap coins, because they were this, because Coinbase cares about the community. Coinbase cares about the money. This is why they were recently like some company came forward and valued Coinbase. It was like $8 billion or $20 billion or something. Some crazy number. It's just about money. They clearly have some type of stake in this coin or this platform that they're trying to line their own pockets, because realistically, why wouldn't you add Cardano or Stellar Lumens? At least Stellar Lumens. Everyone knows Stellar Lumens has been out for years. Why not add Stellar Lumens before you add 0x? That's all I'm going to say about it. Coinbase is I mean, every single day they just kind of get worse and worse. I used to really like them a lot, but they're like, I understand that they came forward and they said that the reason that they can't add a lot of other coins is because they haven't had clarification from the SEC as to which coins are a security and which aren't. That's a lie. That's all. I mean, whatever. Let's move on from this. I'm tired of discussing this. So Qtum is in the, or Quantum. Some people say Quantum. I say Qtum because there's no U here. Anyway, Qtum is in the news. In the nascent cryptocurrency market, partnerships are near essential as a budding relationship with parties inside and outside of the industry bolsters the adoption, efficiency, and security of crypto assets and blockchain solutions. The community surrounding the industry was recently floored as Justin, son of Tron Project, expressed his excitement that his brainchild was partnering with an industry giant that was valued at tens of billions of US dollars. Speculation regarding the apparent strategic deal rapidly circulated through social media channels, with many crypto investors hoping for the best. However, as reported by Ethereum World News, this announcement was rather overhyped, as a report from O'Daily, translated and relayed by CN Ledger, divulged that the partnership was nothing more than Tron purchasing cloud computing power from Baidu. Now, however, Qtum, a popular proof-of-stake based smart contract blockchain, has revealed that it has legitimately partnered with a multinational corporation. According to press release from the blockchain-focused startup, it has officially partnered with Amazon Web Services, or AWS, China division, in a groundbreaking occurrence. Per the announcement, the startup and AWS will be joining hands to expand the hosting services blockchain as a service offerings, with a focus obviously being taken on Qtum's in-house protocols and services. This working relationship will reportedly see the two firms create bases for enterprise-grade blockchain solutions, a service that corporations have been clamoring for. There's a pretty photo. One such service will be a smart contract development platform that is situated on AWS, which will allow developers and users to quickly, efficiently, and cost-effectively code, launch, and manage smart contract systems. This groundbreaking solution will utilize an Amazon Machine Image, or an AMI, coupled with the startup's core software, Solidity, and Gmix Web IDE, which are all integral in the process of operating blockchain smart contracts. Qtum is now a bona fide Amazon technology partner, will now gain access to Amazon's business technical, business marketing and sales resources, which is a positive sign for the blockchain project, to say the least. Qtum is not something that is often in the news. I told you guys, don't get your hopes up when it came to the Tron thing. The fact that they purchased computing power from Baidu, which is the Google of China, is exactly what I was expecting from a partnership. Good job to Qtum, even though this is, what is it? It says Amazon Web Services in China. Still Amazon, the name is still there. At the time I'll be making this video, Qtum is up around 6%. Give or take. I think a bit earlier it was up around 3%. I guess people are starting to wake up and realizing what's happening. To be fair, pay attention to the wording in this. It seems that they are going to be using their blockchain. No mention of using the actual token, which is a bit of a shame. But things like this do present a doorway opening. You know, if you are this company or this coin and you're using Amazon Web Services, this will cause a lot more other people to pay attention to your project and potentially, hopefully, actually use your token in the future. I told you guys to the little segue as well on this. I told you guys before, I think a lot of cryptocurrencies projects are like, their blockchains are definitely going to be around for quite some time. the way that a lot of the as they call it, anywhere between crypto 2.0 and crypto 3.0, depending on what you actually call them or what you see them as. Some people see them as a blockchain 3.0. A lot of companies, in my opinion, are just going to be using the blockchain. I think we're getting to a point right now where everyone's slowly starting to try to solidify themselves in a certain place, i.e. Bitcoin and XRP. I think I said this before in another video, but let's just pay attention to it because this is what I think is happening. Bitcoin, XRP, and maybe Litecoin as like the payment methods. Ethereum, EOS, Qtum, maybe even Tron as like the platforms that things are going to be built on top of. And then everything else is kind of like a bit of a coin flip. Like we also have a huge slice of pie for like the privacy coins who are going to be used by people who want their transactions to be private. I think crypto is starting to come of age. And it's becoming clearer. It's kind of the same with IOTA as well. Like I feel like no one is going to use the IOTA token, at least not now in the foreseeable future, the next 2 or 3 years, unless somebody creates an app or a dApp that's going to be specifically using IOTA. But I feel like all the attention that we've had, especially from like, what is it, BMW? And no, not BMW, Volkswagen. I think it was Volkswagen who partnered with them. Everyone seems to just be interested in using their Tangle and not in their actual token because the value for those coins seems to be coming from the actual expansion and usage of their actual blockchains / Tangle and be used in everyday processes. But yeah, I think pay attention to where you have your money and to the news more specifically that comes out for certain coins that you have your money in. I feel like we are entering the point where you are either going to be used as a payment method, used as a exclusively for your blockchain, used for privacy, and maybe even the fourth one could be like a platform where securities are going to be listed on top of. And that also, I mean, Ethereum also kind of falls in that because we've had news before that people are trying to, they're thinking about tokenizing assets and putting them on top of the Ethereum blockchain, not even using the exact Ethereum token itself. That's just kind of how I feel about it. Anyway, let's move on. So this might be the most disturbing thing that you will hear all week. And it kind of made me very annoyed when I read through this. One of the top market regulators in the United States said yesterday that he believes smart contract developers should in some instances be held liable when their blockchain applications are used in conjunction with illegal activities. Right. Brian Quintez, a commissioner at the Commodity Futures Trading Commission, or the CFTC, made this statement on Monday at the GTEx Technology Week conference. In his speech, Quintez explored how best to fit cryptocurrency and specifically smart contracts into the CFTC's supervisory framework, which was written long before the advent of blockchain technology. Who should be responsible, he asked, when a smart contract violates CFTC regulations? He quickly ruled out both the core developers of the underlying blockchain, miners, and the blockchain's general users, as none of these groups should be held responsible for monitoring the activity of other network users. However, he argued that the developers of the individual smart contract should be prosecuted in connection with the illegal activity that occurs within their respective decentralized applications, or dApps, so long as the CFTC can demonstrate that the developers could reasonably foresee, who can see that, at the time they created the code, that it would likely be used by U.S. persons in a manner violative of CFTC regulations. I hope you all understood exactly what I just said, while stressing that his statement represents his personal views and not the formal stance of the CFTC. Quintez used prediction markets as an example of a smart contract application that could lead to developers being prosecuted by the agency, as these apps could be used for activities that are contrary to public interest, such as betting on whether a public figure will be assassinated. Consequently, he argued that the prediction markets creators could be prosecuted by the CFTC for offering illegal event contracts. What it comes down to, and I know exactly what he's mentioning as well. There's a platform called Augur, AUGUR. You can Google it. It is a prediction platform where the entire point of the platform is where the original idea behind it was if you were trying to bet on something with your friends or with your family, you can bet with them on this platform. I bet that next week it's only going to rain 3 centimeters. If I win, I get this much. If you win, you get so and so. People have been betting on horse races and everything that you would normally be excluded from betting on in the real world. You were able to bet on Algor, and it comes down to there are a lot of people who predicted that this would become very popular among Wall Street people, simply because if you have to get some type of regulatory clarity or clarification, or you have to do this, or you have to do so and so and so when you are trying to bet on. Let's say I want to bet that this stock is definitely going to fall by 5% next week. There's no specific place that we can do that within Wall Street. We can do it very easily in 5.5 seconds. Let's do it on Algor. A lot of people have been making predictions on Algor and many other prediction platforms that let's say I think this world leader is going to be. He's going to trip over a banana. He's going to fall onto a pole, and someone's going to shoot him in the leg at 14 a.m. on this date when the sun, very, very specific and very weird things. The problem is that all of it's a huge problem. Not people being able to bet on what they think is going to happen. People are going to do what they want in general, but to think that you can or should have the power to legally prosecute a developer of a smart contract platform or of a dApp who has to have the foresight to know that in the future someone is going to nefariously use their product incorrectly, and therefore that person should then be taken in and they should be held accountable for the actions of other people on their platform. If you make a platform that is specifically for harming other people, then most certainly, that's kind of where you draw the line. If you make something where people can bet on other things that are going to happen in the world, and you just happen to have a couple of people who decide that they want to be a little, they want to color outside the line that day, and they do something that could be considered or is illegal, and then you get the developer in trouble, things like this are very worrying. And it's happening, in my opinion, for probably one big reason. And I said this before. What's happening now is that regulatory bodies, and I'm going to focus specifically on the US in this instance, are so worried about losing power because they took too long to figure out what cryptocurrencies and blockchain were, that they're trying to cover every single base in every single corner, and they're going about it completely incorrectly. Reading through this and just hearing about it, and the fact that someone thought that in their mind that they should have the right to be able to prosecute someone because of something that they made that other people then used illegally is insane. And the fact that we have so many companies who are leaving the United States does not surprise me at all. Part of the issue is that in many other instances in the past, the United States has thought that it was their right to be able to go after people in other countries because of something. Like, let's say you lived in Venezuela or Argentina or South Africa, and you created something that someone used illegally in the United States. The US before has believed that they had the jurisdiction, the worldwide jurisdiction, to be able to find who did something in South Africa that then pushed over to the United States, and therefore that person is then liable to be able to get them in trouble. And that is incredibly dangerous. I'm glad that this is his personal opinion, but I'm going to assume that there are other people who also believe exactly what he believes. I don't even the fact that you could think that is completely out of line. I hope that does not get pushed through. The US is setting itself up for no one's going to be in the US. I have a strong inkling. If Gemini and Coinbase had not been created in the US, or let's say they had been created in 2017, let's say they had been created April 2017, I can almost assure you not only would they have been pushed down into the mud, just like every other company who's also left the US, I'm pretty sure Coinbase would have put out some type of statement already saying that they are sorry, but they cannot work with people in the US anymore. Same exact thing with Gemini. I think they all would have left. They're making it very unfriendly for anyone to do anything with crypto. And there was also talks about them trying to do the sandbox thing that Russia was talking about doing in a couple other countries, which pretty much is like everything that you do as a developer on a blockchain platform, on a cryptocurrency platform, the government would be able to have someone standing directly over your shoulder, being able to see exactly what you are doing. I mean, I predicted this a while ago. It's kind of sad for me to say in some ways. The U.S. typically before in the past has been tried to be a leading figure when it comes to innovation and stuff like that in tech and moving forward. Blockchain has them completely confused. I don't think they know where to go. They're so concerned with the fact that they can't control Bitcoin or any other currency because they can't control it or create it, and they're trying to figure out how to stop ICOs, stop dApps, bring people in for questioning for who it's completely out of line. I don't know if any of this stuff is going to actually end up going through, but the fact that this is even a question right now, and I'm pretty sure there are people sitting in a room shaking their heads, not you guys, who were there for these type of meetings talking about, yeah, we should definitely be able to do that. That's a problem. And it kind of leads me into the next story as well. So during a panel discussion on investing at Bloomberg's Institutional Crypto Conference in New York, Dan Morehead, CEO of Pantera Capital, said on the 15th of October that based on his experience, the possibility of a Bitcoin ETF is far from now. Dan Morehead is known by the community for his bullish position on Bitcoin and the crypto markets. A few months ago, during a phase of rapid decline in Bitcoin prices, Morehead injected some optimism into the community by claiming that Bitcoin was screaming buy. We also spoke about that when he said that. Despite his stance, Morehead has always been an objective speaker. A few weeks ago, he commented that investors were overreacting to Bitcoin news, calling for calm and more objective fundamental analysis. This happened when did this happen? There was something that happened in the news. It wasn't even a country banning it. It was something completely trivial. I remember I woke up, I saw the news, didn't pay attention to it. I made tea, came back to the computer. Bitcoin was down by like 13%. People keep panicking when these things happen. So, everyone needs to calm down. I'm glad things have smoothed over a little tiny bit. Discussions about the possibility of a Bitcoin ETF increased their intensity after certain political movements within the SEC generated a wave of criticism among investors. The appointment of Hester Pierce and her declaration against a decision to deny a Bitcoin ETF request filed by Winklevoss brothers stimulated the interest of many analysts. This happened when the SEC said that they weren't going to have a Bitcoin ETF go through by the Winklevoss twins simply because they were missing something. The market wasn't mature enough. Bitcoin wasn't stable enough. Bitcoin couldn't do this. What it came down to is that the SEC decided that they couldn't find a way to control Bitcoin, and therefore Bitcoin was too young, and therefore they had to stop the ETF. Hester Pierce came forward, who is a member of the SEC, and she said that she thinks that the other SEC members are completely wrong. She kind of hinted, or rather I took it as a hint, that the reason that the SEC has been saying no to them is because the SEC can't control Bitcoin like many other things that they can within the United States. And also because the SEC is waiting. They want to make sure that when they do declare that an ETF is going to pass through, that they, that they let the public know that this was a this was a rough decision. And, they thought and deliberated very hard. And therefore, now we are praised with the addition of a Bitcoin ETF in our laps. On top of this as well, for those who have not been paying attention, the SEC came forward a couple of weeks ago, and they said that the other 9 ETFs that they rejected are going to be, re-reviewed. They said maybe they made a mistake. Don't hold your breath on any of them. If they rejected them once before, I think re-going over them is just a ploy in some sort of way. Haven't figured it out yet, but don't even pay attention. I'm pretty sure all 9 of them were going to be rejected once again. The sentiment was later reinforced by the appointment of Elad Roisman as commissioner. For the first time, it was possible to speak of an SEC with a pro-crypto majority. One decision that strengthened this idea was the review of some resolutions, giving the opportunity to several interested parties to present arguments and recommendations. For Morehead, however, despite the problems of regulations, the real challenge for cryptocurrencies is the attraction of institutional investors that stimulate growth in markets to a point that the SEC deems such businesses to be of special importance and solidity. Morehead elaborated on his view of this phenomenon that he calls institutional inertia. He said, "I'd say the biggest gaping factor is simply institutional inertia, right? Like most of the people in this room don't have to do anything with Bitcoin today. The blockchain space is super viral. Like once you own a tiny bit of it, then you start buying a lot of it, and you get all your friends to buy it, and you get your colleagues and peers in the industry to buy it, end quote. The CEO of Pantera Capital commented that the approval of an ETF is a complex and bureaucratic process. Not really. He believes the ecosystem is still at a very early stage to think about the success of the approval of a Bitcoin ETF. He said very few people know that the last asset class that was certified for an ETF was copper. It took 3 years, even though copper has been around for 8,000 years. So I think an ETF is years away. End quote. Without reading any more, this has been expressed by many other people in the financial world, not even the cryptocurrency space, who believe that at this point, we are only going to have, how do I say this? The only way that we're going to have an ETF, so people have said that we may have one next February. Doubt it. The other 9 that they're reviewing, if one of them gets passed through, that'll be the craziest thing in the entire world. Still doubting that. People think that not only will we not receive proper information from the SEC as to what constitutes a security, a commodity, or utility coin, but that we're also not going to see a Bitcoin ETF for a number of years. Like I said, this ties in with this in a certain way. These organizations have gotten to the point where they think that they can control everything, and all that's going to happen is the same exact thing that the CEO of Binance said a couple of weeks ago. He said they don't see the US even as a major market anymore. They're slowly moving away from it, as many other companies are as well. Everyone's packing their bags. They're going to another place. If we don't have a Bitcoin ETF, in my personal opinion, by the end of this year, that is strike one. If we don't have it by March 2019, we're going to hear a lot of news about people completely leaving the United States for Canada, for Mexico, somewhere in South America, for Europe, and parts of Asia. I'm calling it right now. I don't know what their obsession is with taking so long. It's not a complex process. Especially if we had rules or news before that they planned on it, it's not difficult to push through an ETF. Every single ETF, I think it's been like 14 or something like that over the last 4 years that have tried to go through, and every single time that they didn't get to go through is because the SEC said that they were missing something in their in their paperwork. You missed this point where you are going to help people or let them better understand what they're getting into. That was added into the paper. The next one got rejected as well. You didn't have this clause inside of it. Clause was added. You didn't have this. It's all a farce. I don't know what they're waiting for. A lot of people have been saying that they think, capital T on that, think that everything is just being held back for November, that they're waiting for Bakkt and the New York Stock Exchange to officially launch their thing sometime in November, and that this is when we will have clarification, maybe for certain coins, capital M on that maybe, but as far as like an ETF or another Bitcoin futures or so and so, because if the New York Stock Exchange / ICE is going to be launching something, they will probably maybe get preferential treatment when it comes to launching something. As of now, I've lost all hope. I do apologize for saying that. That's not me losing hope for crypto. That's me losing hope for a certain country getting it together and realizing that there's money to be made. People have also been asking the discussion that's been happening around China controlling 80% of Bitcoin's mining power and why the US hasn't stepped up, or rather, why can't the US create their own mega mining corporation institution to be able to regain the control of Bitcoin? It's all this right here. It's all this. It's all in the details. It's all in these letters. Major companies are getting into mining in the States, but they're also having issues, and a lot of them are actually moving to Canada, Greenland, and Iceland. Some of them are going to Alaska, because they're trying to get cheap electricity. But it's difficult to get cheap electricity in a lot of parts of the United States because politics. But that's going to do it for this video. Like I said, don't be surprised if by next March, we've already had a lot of people leaving the states because of what's been going on. Don't be surprised if this accelerates, because the people from Coinbase have also come forward in a number of other, not advertisements, conversations on TV, like with CNBC and stuff like that. And they said, people were asking them, why have you not added other coins? And they said, we're waiting for the SEC. We're waiting for the CFTC. We're still waiting for the SEC. We're hoping to receive word from the SEC any day. That's been like 7-8 months now. Take your time too long, you will miss the boat. That's at least how I feel about it. Hope you all enjoyed. Hope you all are having a great day, morning, afternoon, and or evening, wherever you are, wherever you might be. Hope it's absolutely fantastic. Hope you guys find money on the street. Thank you once again for watching and or listening. And I'll talk to you all soon. See you.